Let's now discuss the prospects of the market right now. We've got Anshul Saigal, Kunal Bothra, Naresh Mirani joining in on the show right now. And Kunal, after that quiet start, what a move it's been. Let's first address what the charts are looking like.
Yeah, for the indices, it's been a good day. Almost 250 points plus for the Nifty and the Bank Nifty. And the good part is that the IT index has managed to make a very strong comeback. We are just 200 points away from the for the IT index to make a fresh lifetime high, breaking past I think 39,400, 450 approximately is the previous highs for the IT index. So we're just about a few points away for the IT index. But I think it's a show of large cap names which have been doing pretty well for the IT pack. There's been good short covering, which we've seen for the first time, I think, in the likes of HDFC Bank today. And in the first half of the day, we saw good recovery in the likes of Axis Bank and ICICI Bank. These stocks, they managed to make a fresh swing breakout, new high for themselves on the short-term chart. So I would probably believe that, we could now be at a point where the index trends could continue to be positive if the large cap stocks continue to move up higher.
Okay, point taken. But talking about the IT stocks, so not just the frontline index, the frontline stocks, even a Sonata Software is up 10%. Remember that stock had seen an initiation this morning as well. Plus ISG had talked about how Sonata Software has got back into the $1 billion club. So that stock is up a solid 10%. You have Coforge higher by 8%, KPIT Tech doing quite well. And of course, Zensar Tech, Emphasis. These are some of the names which are in the spotlight on account of all of this. Anshul, is the street making too much of the earnings from TCS? Or do you think this was long overdue?
Hi, Anisha. As regards the IT space in general and TCS numbers, clearly the numbers are a slight beat over street expectations. Since 2021 December, this sector has consolidated by and large, particularly for the large caps. Even for this frontline name, if you look at the stock price, you will notice that it is about the same level that it was at till about 2.5 years back. So clearly, there has been significant consolidation in this space. And the street was looking for a sliver of positivity, which came through in this quarter. As also, there is some indication in the US that there will be there will be a benign interest rate environment going forward, which will be good for industry over there. And that translates into growth for Indian IT. And take all of this together, it looks like this is really what the street was looking for, and TCS has given a spark to the fire. I think that at least in the near term, there will be expectations built that the sector will have tailwinds.
Okay, in fact, on that note, listening to the management of TCS itself, they are talking about FY25 being better than FY24, but not calling out the bottom as of now. As far as TCS is concerned, AI pipeline is swelling up for them. $1.5 billion is what it is at, and the headcount growth this time around was also quite solid. Here out the TCS management.
The good news for us is all the industry verticals have grown. And almost all industry verticals and all geographies have grown. That's the first positive sign we want to look at. And we are also seeing from the growth perspective, it is all both kind of projects. We are seeing good growth in discretionary project as well as in the, when I say growth, the cost optimization, definitely there's a growth. Discretionary project is a status quo. So overall, we are in a happy situation with the results that we have got. We have said that we believe FY25 will be a better year than FY24. We stick to that. We are not confident enough to call that things of the market sentiment has changed for good at this. If you look at the pipeline, both our overall pipeline and qualified pipeline, they stay at a very healthy level, more or less near the historical peak. So, and we announced a $12 billion plus order book last year. Even after that, we have been able to replenish all of them. So, it's a slightly, and we also said our comfort range is 7 to 9 when you take out all those mega deals. This time there is no mega deal, so it's within the range, and it's a timing issue. There are few large projects we are working on, like which could have been signed this quarter, maybe can slip by might have slipped by a few weeks to this quarter, come a Q2. So we don't see any issue there. Like order book is quite healthy, pipeline is healthy, what we see coming closing in Q2 is healthy. So yes.
Right. Well, the big event today, other than the markets, has really been Anand Ambani and Radhika Merchant's wedding this evening, as they're all set to tie the knot at the Geo World Convention Center in Bandra Kurla Complex today. The star-studded ceremony will be attended by nearly a dozen former presidents, prime ministers, top global CEOs, and celebrities from the likes of UK Prime Minister Boris Johnson, US Secretary of State Hillary Clinton, the Kardashian sisters. And as we can see, a lot of celebrities have been arriving. Telecom tycoon Sunil Bharti Mittal, Sachin Tendulkar, and former UK Prime Minister Tony Blair as well.
Welcome back. Well, for the market, it is all about IT. You can't take your eyes off the 5% move that we are seeing on an intraday basis on a Nifty IT index. I'm not talking about one stock, it's the entire IT index which is up 5%. And in fact, the Nifty IT index constituents itself today have added the market capitalization of a whopping 1.5 lakh crore rupees. So that's the kind of big build up that we have seen on IT sectors today, and it's all because the big beat coming in with respect to TCS in terms of the top line, and the fact that there were indications that verticals like BFSI, North America, high tech have managed to report a meager amount of growth, or at least are on the trajectory of growth, and all of that has set fire within the entire IT pack. What else is active in the trading session today? It's very difficult to call out any other name apart from IT, because in your list, the top 10-20 names are all coming in either from IT or the other vertical which is in focus is railways. So RailTel Corp is up 15%, RITES is up 8%, Ircon International is doing quite well. In fact, we will get Jinesh shortly to talk to us about the railway stocks as well and how some of them are poised. But Anshul, let me first take it across to you and ask you, these stocks have seen a massive rally. Is there still money to be made, and is there still a fundamental reason one would look at buying these stocks?
Anisha, I remember just prior to COVID, we were buyers of one railway company in our portfolios. And at that time, that stock used to trade at a price of around 20 rupees. And it had an EPS of 4 rupees. It had a dividend of 2 rupees. And with a market capitalization, which was, half of the market capitalization was cash. Revenues were 10,000 crores, and the company had an order book of 70,000 crores, which meant that 7 years' revenues were already in the order book. These were the valuations at which this company was trading, and you could have hit a dart and picked a stock in this space, and it would be trading at 2, 3 times, 4 times price to earnings. From there to today, these stocks are trading at 50 times, 55 times price to earnings. That stock itself is up 35 times, nearly. And other stocks are up around similar sort of anywhere from 5 to 15 times. Having seen this sort of a rally and seen a multiple expansion of the order that we have seen in this space, while the space has significant tailwinds on demand and there is also excitement in terms of the opportunity, but most of that is already in the price. One has to be extra cautious in this space at this time, is our judgment, because risk reward is clearly not favorable at this time. there is a lot of excitement around what the opportunity is, and which is why you are seeing at higher levels more and more people coming in and buying. But it is precisely in such high bullish times that you see seeds of bearish times ahead, and which is why I would be cautious on this space going forward.
Right, okay, that's the take coming in some of the railway names. Today, of course, it's IT all the way, be it an Emphasis, which is now sitting at a tear of about 6.5%, Coforge higher by 8%, or for that matter, Wipro, which is also higher by 5.5%. Naresh, how sustainable does the move in IT look to you?
So we've just seen one result. So now going forward, it would be selectively on one by one different results will give a move, but the structure is very clear. We've hit a new all-time high almost on the index itself. So that clearly tells you the structure. And the bias is now positive. So for now, even if we get unless we get some terrible results, we may not see a lot of downfall and it will become a buy on dips for the whole sector as such. And mind you, the sector has gone through a 3-year phase of consolidation after topping out in 2021. The index did not come back to those same prices, and many stocks are still down 20-30% from those tops. And at the same time, there are names like KPI, T-Tech, or Zensa Tech selectively, which have continued to do well. So for now, it's time to look at the ones which have fallen 20-25% from 2021 levels. Those could play a catch-up going forward.
So those are the views coming in on the IT sector, and for now, of course, all of these stocks are in focus. But oil and gas space, that too has seen quite a bit of activity over the last couple of trading sessions. Oil India, after that 10 to 11% move yesterday, opened with a gap up today. Right now, also the stock is up 6%. Morgan Stanley had, of course, upgraded the target price on the stock quite meaningfully. I think 660 thereabouts is the new target price on that one. Plus, of course, the commentary coming in from Mr. H.S. Puri, the minister, as well, about the $10 billion investment expected in the exploration and production of these. Quickly, Kunal, on Oil India, what's the view? Even ONGC and other stocks for that matter. And then we did speak with an analyst. We'll play that soundbite as well as to his view on Oil India. But Kunal, you go first.
So yeah, I think ONGC is something which is looking attractive. That's a chart which I think has done pretty well for itself over the last few days, where the stock has moved from 270, 275 to now 310 or 310, 312 levels for itself. So the momentum seems to be quite strong. Oil India, of course, is a very similar kind of a chart. The last 2 days, we've seen the stock showing signs of a good price volume breakout. My expectation is that after this kind of an upward move, the supports for Oil India has moved up higher. So earlier the supports, which is on the 50-day moving average, was around the 450 mark for the stock. That has now moved higher to 500 levels for the stocks, which means any kind of a dip closer to 540, 550 levels would probably attract more risk reward traders to enter into the stock.
Oh, right. Okay. In fact, since we're on the subject, let's also hear it out from Swarnendu Bhushan, who is the co-head institutional equities at PL. He expects Oil India to outperform, and that outperformance is going to be more than ONGC, is what he claims, in the next few years.
The reason why Oil India has been jumping much sharper than ONGC is primarily because of the volume growth that it has been showing. So April to May data also, if you see, Oil India has given 6% volume growth in oil and almost 9% volume growth in gas production. And it is guiding that it will be raising its crude oil production from 3.4 million ton to 4+ million ton by FY26. As well as gas production, although it is guiding that it will be raising from 3.2 BCM to 5+ BCM in FY26. But we have a little bit moderate expectation on the gas front. But nonetheless, over next 2-3 years, you will see that continuously Oil India will be giving you a sharper production growth in both oil and gas compared to ONGC, where we have seen that although they commenced their production from KG-DW and 98/2, but we saw that crude oil and gas production both are falling. Even in April and May data, if you see, they have registered 2.5% decline in crude oil production and almost 5% decline in gas production Y-on-Y.
Right. Okay. That's the take coming in on Oil India. The fact that, it's going to outperform even the likes of ONGC. That's the view coming in from the house of Prabhudas Leeladhar. But we were just chatting about railway stocks, and there's been a lot of buzz around the increased allocation perhaps in the upcoming railway budget for railways. My colleague Jinay is here to give us a breakdown of what really is happening across the railway stocks right now.
Well, yes, so railways has been a clear focus by the governments for many past budgets. If you look at the budget trends for railway over the last 5 years, it has been growing with a CAGR of about 9.8%, right from increasing 1.6 lakh crores in FY 2021 to increasing about 2.55 lakhs in the interim budgets of FY 2025. Now, if you look at segmental expenditure of this budget, you'll find that 1 year increases from the budget is coming in from bridge works, tunnel works and approaches by about 66%. The road over and under bridges have increased by about 29% and road safety works have increased by more than 28%. Also for new lines it has increased about 13% and rolling stock it has increased by about 12%. Now Ashwini Vaishnaw, who is the Union Minister of Railway, recently announced a significant boost to the country's rail network. The first is that production of about 2,500 new passenger trains have begun, and second is additional more 10,000 coaches have been approved. Third is about 5,300 kilometers of rail net tracks were added about last year, and this year more than 800 kilometers have been added so far. Fourth is production of 50 more Amrit Bharat trains have begun, and fifth is railways targeting about 4,500 rail route to add under Kavach this year itself. Moving on, budget is coming up. Let's look at some of the 3 announcements likely to be announced in this budget. First we'll see an increased budgetary allocation for railways coming in at around 2.8 lakh to 2.95 lakh crores. Second is on Kavach front. Railway is expecting to float a tender of about 3,000 kilometers in FY 2024 to FY 2025. And third is Railway's focus is on massive transformation for passenger rail transport. They are aiming to run about 250 Amrit Bharat trains over the next 5 to 7 years. And also don't forget that trials for first version of Vande Bharat trains are expected before 15th of August.
Right, okay, that's the take coming in on railway stocks, what's likely from the railway budget and what the trend has been in the past. But let's get in some closing trades as well on that note. Kunal?
So Wipro is something which I initiated in the morning, expecting the stock to do pretty well for itself. So far it's done quite okay. 560, 562 is where it's trading right now. So would continue to be bullish on the stock with an expected target near to 580 to 600 levels.
Right, Naresh, what about your closing strategies?
So that would be buy on Reliance Industries. The stock is again testing the highs made of 3220 roughly a few days back. So a pendant formation here, once it breaks 3220, you could see a move to 3260, 3300. So buy here with a stop loss at 3190.
Okay, let's take a very quick break on that note. But Anshul, thank you for joining in this Friday afternoon. Good to have you on the show as always.
If you like this video, then like, share and subscribe to ET Now.